We were just discussing there about how Hong Kong's makeup, and I think everyone feels that, the changing face of the city, less of a focus on sort of expats from Western countries. We're seeing a lot more people coming in from mainland China, and this is the new Hong Kong.
Of course. Well, good morning, Annabelle. Good morning, David. Thank you for having me. I also appreciate the compliment embedded within the question. I appreciate it. Look, it's true that the demographics of the city have changed. You know, we've lost 100,000 expat families over the last 18 months. We see more and more mainlanders moving to Hong Kong, not just for travel and leisure, but also building roots over here, calling the city their new home. So it's absolutely true that the demographics of the city have changed.
You can actually remove that. Don't worry. Yeah, I know it's coming loose as well. Yeah, there we go. Thank you so much. Well, okay. How's business? How's business recently, and how have things? I mean, is it comparable to pre-pandemic? Is it a useful exercise to even compare?
Look, it's a tale of two halves for us. The first 3 quarters of this year have been very difficult. We were hoping that we'd start seeing a sort of COVID comeback story, similar to what other international towns like London, Paris, New York saw in terms of restaurant and retail spending. That party didn't happen for us this year. Parts of this year, especially around the summer, were very prickly. But I'm also really happy to sit over here and report to you that we've seen signs of stabilization and growth beginning last quarter this year. So overall, I think we're going to finish the year 3 to 4% down, but our fourth quarter performance this year should beat fourth quarter last year. So it's kind of mixed results.
I can just follow up on that as well. Because you guys are opening up new places as well. Yeah. So when you compare it to last year, is that same store sales? Like how do you measure growth in aggregate, for example?
Look, David. So we have this sort of view. We're off Hong Kong, by Hong Kong. We're very optimistic about our Hong Kong chances. We believe in a black sheep comeback story, a Hong Kong comeback story. So we're spending $30 million US on new development next year. More than half of that is going to be in Hong Kong. You and I just off air were talking about the Peak and Rajasthan Rifles.
Yep.
Rajasthan Rifles is not going to be the only black sheep restaurant on the Peak. We're opening 5 new restaurants on the Peak in the next 6 weeks. So we're risk on, you know, and all of this kind of derives from this conviction that we have that there is going to be a comeback story in Hong Kong, and commercial rents are not going to be at this level again. So okay. I don't see next year being a happier year. I think next year is going to remain challenging. There will be headwinds, but you know we're trying to play the long game. And our conviction, our thesis, as I said to you before, is that rents are never going to be at this level again.
So you're sort of trying to take advantage of that weakness in that part of the market to expand. Then.
Yes, you know. So we are. You know, I said 30 million in development funds. Half of that we're spending in the Middle East and in Singapore, but the other half is all focused on either scaling existing work in Hong Kong or developing new content for the Hong Kong market. So we very much are. We continue to be risk on for the Hong Kong market.
That fourth quarter pickup that you saw, was that also based on any sort of adjustments that you made to your business model, linking it back to the changing face of the city? Did you find that you actually had to rethink your strategy as well?
Look, Annabelle, that's a great question. We've had to make some tactical shifts, and if I tell you everything, my team's going to kill me. But we make some tactical shifts, definitely. But I think also the sentiment today, or the sentiment beginning of the fourth quarter, was more positive than what we had in the city quarter 2, quarter 3. So I often say that how we're doing at the restaurants is a good indicator for how the economy is doing. You know, what people are coming. I'm going to be looking after 4,000 guests tonight, and how they feel about their consumer discretionary fund, how they feel about the Hong Kong economy. I'll be able to see it in the restaurants through how much they're spending, how much they're ordering, what kind of wines they're opening. So in that manner, I think restaurants are a very good barometer for consumer sentiment and consumer confidence.
I mean, this might be anecdotal, but the notion that people are drinking less alcohol, am I overthinking that?
That's definitely true.
So it's happening.
100%. So
okay.
You know, I said to you earlier that we're 3 to 4 percentage points down this year in terms of sales, but the number of guests that we've looked after this year is the exact same as last year.
Yeah.
We looked after 1.25 million guests last year. We're going to look after 1.25 million guests this year. So that data hasn't changed. So where is this drop coming from? It's coming from a drop in wines and spirit sales. And then beyond that, so very broadly speaking, we play in 3 different segments. And we call it casual, premium, luxe. Casual, you're spending 50 US. Premium, you're spending 100 US. Luxury, you're spending 200 US. So my casual and premium segments kind of remain strong. The drop that I'm seeing is at this high level. And a lot of that drop comes from, as you and I were just talking about, wine and spirit sales. And then if I can add to this, there's a global kind of thing at play over here too. That just the younger generation is drinking less than I was. My first job 18 years ago was in New York, and the amount of money we were spending on going out to bars or restaurants or clubs, the younger generation is spending their money differently. So that sort of is the delta.
What did your luxe group, like that high spender, what did it look like pre-COVID, and what does it look like today?
My chefs don't like it when I say this, but Annabelle, I think that segment, that fine dining segment, sort of is in trouble. And that's not a Hong Kong phenomenon. I think that's a global phenomenon. I call it the tyranny of the chef. The tyranny of the chef is over. So I think the era that we're entering, these long degustation menus, tasting menus, where you're chained to a table and you're getting course upon course upon course, that's done. I think that the world that we're entering, and a lot of our work is going to be, and a lot of our new content is going to be around this. It's going to be accessible price point, and a deeply experiential dining experience.
Right.
This is what the younger generation's asking for. And we were talking about demographics. I think this is the main thing at play, and this is happening not just here, but also in other Tier 1 restaurant markets. I think that the fine dining game is going to narrow down, where it increasingly becomes a winner-takes-all game. So right now, perhaps we have 300, 400 fine dining restaurants in Hong Kong where you go spend more than 300 US for dinner per person. I see that dwindling. I see that dwindling quite drastically over the next few quarters and years.
And that's, to underscore the point, that's more a behavioral issue, a change. And what does it also mean for margins, for example, for a group where you oversee just this whole wide spectrum of price points?
Look, David, again, fantastic question. The biggest adjustment that I've had to make this year as an entrepreneur, as a restaurateur, is I've had to kind of make peace with the fact that these restaurant margins that we were used to 10 years ago, they're gone.
Okay.
You know, so and there's a lot of sort of global economic pressure on all our costs. So the days of margins being in the high teens or high 20s, those days are gone. Now, if we can deliver 10 to 12% on the bottom line, we give ourselves pats on the back and high fives. It's happy days. So that's the biggest kind of expectation adjustment that we've had to make, that these margins that we were seeing in restaurants 10 years ago, that's done. And if you're waiting for those margins to return, you'll be waiting a long time.
A final one on Hong Kong, and I think Belle has a question in the Middle East. Do you worry about how do you look at competition? And I'm just trying to figure out, when you come up with a concept, you have this much money, of course, to invest next year. Is competition even a consideration, or is it just
David,
you have the best product, you think?
Well, I think we do.
Well, clearly you do. Okay, clearly you think that. Yeah,
thank you so much for saying that. And I'll give you your gift card offline.
We're not allowed to accept gifts. That's policy.
Yeah, that is
I'm just getting us out there. But anyway, go.
So I think that we are one of the better operators in this part of the world. Having said that, though, competition is a really positive thing. This means that there's an opportunity set available that these operators are looking at. We heard the story of all these mainland operators coming, but this has been happening since I started Black Sheep 12 years ago. And that, to me, shows signs of life in the Hong Kong economy. So I look at that as a positive thing. That makes me feel a little bit more confident about this 15 million US investment I'm about to make in this market. So there's nothing problematic about that, and it just keeps us on our toes. I welcome competition.
Middle East, it's been such an interesting sort of dynamic to watch, the growing relationship we see between mainland China, Hong Kong sort of being the conduit to the Middle East as well. How does that work for you?
Look, one thing I'll say about the Middle East is that everyone's really bullish in that region for restaurants and retail. The streets are not paved with gold over there. It's going to be challenging. So we're opening our first restaurant in Dubai in about 6 months. Very soon after that, we'll be in Abu Dhabi. And I tell my team this sort of very loudly and clearly, that we're going to have to work really hard there. We'll have to, the way we started in Hong Kong 12 years ago, that's how we start in that market. We're not taking any goodwill from here or there. We've got to sort of re-earn that goodwill, rebuild relationships, and build trust for that market. So, yeah, there's a lot of opportunity in that market, but I don't think that anyone's waiting to give us a hero's welcome. I think we'll have to go earn our spurs there.